Hello, everyone, and welcome to our next topic, evolving regulations in Asia, where we hope to debunk some myths and misconceptions about how regulations will affect the digital asset industry. My name is Kenny Lee. I'm the head of OSL Singapore, where I've spent the last few months knee-deep in licensing for the Singapore Payment Services Act, which has now leveled me up to super expert status on regulations. Joining me today are some very well-known experts in the industry who are continuously sharing their wisdom to help us navigate and adapt to these changing regulations. First is Urszula McCormack, a partner at King Wood Mallesons, who is one of Asia's leading blockchain and financial regulatory lawyers, who has advised many firms on these evolving regulations. Welcome, Urszula.
Hey, Kenny, hi.
Next is Henri Arslanian, the global leader of crypto for PwC, a best-selling author and creator of the Crypto Capsule series, where I'm quickly able to find the top 5 things I need to know within 60 seconds. Henri, welcome.
Thanks for having me, and we'll try to stay in under 60 seconds today as well.
And the last but not least is Marco Santori, the Chief Legal Officer at Kraken, one of the world's largest digital asset exchanges. I can imagine that being a lawyer representing a crypto firm, you have a lot of war stories to share with us all.
I have plenty if you have time. It's a pleasure to be here.
All right, so let's start with our first topic and some facts. And just as a background for everyone, crypto regulations in Asia's tier 1 financial capitals kicked off in April 2017 with Japan recognizing Bitcoin as legal property. Then it reached the shores of Hong Kong with the formal announcement of a regulatory framework for virtual asset trading platform licensing by the SFC, formally in late 2019. And also, not to be outdone, the Singapore Payment Services Act has gone into effect earlier this year in January for the dealing of digital payment tokens, or DPT as we affectionately call it. This trend has continued into tier 2 and tier 3 countries throughout the Asia region. It's sort of like dominoes toppling. It's just providing that regulatory clarity that we in the industry have all been after. So someone had actually commented to me that yes, OSL has prepared for this journey since day one by getting a Big 4 audit, by building our governance as a public company, and continuously strengthening our compliance far beyond what is required. But what has it meant to the bottom line? When they said to me, Kenny, the money is made in the gray, not in the black and white. So there are firms still choosing them to base themselves on locations off the shore of Africa, Italy, islands in the Caribbean, and jurisdictions where there's much, much wider latitude to run your business. So it is more profitable and better for crypto firms to stay unregulated. Myth or reality? Maybe Urszula, we could start with you.
Yeah, thanks a lot. Well, look, I think there's no doubt that there's quick money to be made in any industry that is growing rapidly, where there is rampant speculation and where the regulatory frameworks have not yet caught up. We saw that. We saw people raising $30 million US dollars in a flash back in 2017 when we kicked off work in this space, and it was really rapid. Same time, a lot of people losing money since then. Class actions involved in pursuing those who were perceived to have done the wrong thing. But really, what I think we've seen recognized is that for anybody looking to grow a sustainable business, one that grows, that scales, that accesses new markets, that can access bank accounts, that can have the founders exit successfully if they want to do that, really has to leverage regulation. And what I've seen is that those who have been bold in really tackling regulation head on, but also working with regulators and being on the front foot with embracing that next wave of regulation to help shape it, have been best off in terms of crafting a business that works. So any firm that didn't do AML and KYC, years ago is struggling. Any firm that has regulatory problems in their history carries a lot of baggage, even when they're trying to be onboarded by an accounting or a law firm. So, that is always the advice we have, irrespective of whether it's a crypto firm or a gaming firm, or frankly, someone who's looking to launch a space asset. You need to look ahead to the next wave of regulation to build that sustainable business.
So Ursula, you mentioned compliance. Maybe Henri, you could talk a little bit about sort of the compliance advice that you can sort of give into firms that are looking for regulation.
Well, absolutely. And first of all, I remember very well, Kenny, a couple of years ago when I used to go on panels and conferences to say that we need KYC, we need AML in the crypto space. And frankly, I used to get criticized by the community. And I think now everybody realizes that this is essential if we want the industry to move from 1.0 to 2.0. we really need a proper to ensure that we're not letting terrorism financing or launder money to enter the system. From that perspective, the one thing I'll mention from regulators, Kenny, is that in my experience, as many of you know, I work with a number of regulators, central banks, all from crypto policy to crypto regulations. I would argue that the average regulator is way more knowledgeable on crypto than the average financial services professional. And I would even say that in many cases, regulators do not get the credit they deserve for the work they've been doing in the space. As you know today, according to Cambridge University, only 5% of regulators do not have somebody working on crypto internally. And I would argue that over the last 18 to 24 months, now we're having actually more regulatory frameworks in many jurisdictions. The challenges that I'm seeing in practice right now is more on the ongoing, so on the operating side. How are you implementing these regulations? The licensing time that it's taking, the operating model these regulators are taking. The biggest challenge I would argue now that we have as an ecosystem in this regulatory space is actually not crypto regulations. It's actually, it may sound stupid, crypto tax. I really expect over the next 18 to 24 months we need more guidance on topics like, borrowing and lending. We have a very, very gaps in the market right now on how you actually tax that, how you look at crypto fund. Now we have a lot of regulations for crypto funds, but a lot of the same exemptions that apply to traditional hedge funds, for example, has still not been in place for crypto hedge funds due to the assets they hold. So that's something I'm looking forward to have some more clarity over the next couple of months, not only regionally, but also globally.
So Henri, just sort of delve into that point. I mean, do you see that changing? Do you see regulators or also maybe countries sort of speaking that there is money to be made here? Instead of trying to beat them, we join them and we tax them. That's how countries think, right? So what sort of tax regulations should we expect maybe in the coming future?
First of all, let me put a very basic point. I think many of just because we're trading crypto and we believe crypto is not outside of the tax world, let's put it that way, right? And for sure, a lot of jurisdictions will come actually and put some tax clarity around it. The benefit, I would argue, in one case is once you have tax clarity, it also solves a lot of other problems that we've had recently where some have been saying that crypto is not even an asset class, for example, right? I really believe this is something that needs to be done at the same level, at the same extent that we've had firms, best practice firms like many that are speaking at this conference and others in the ecosystem who have led by example, try to comply with the applicable regulatory frameworks. We're going to have the same kind of compliance being done on the fiscal side as well. And I think that's something that we need to do, not only because it's what we need to do, but also I think that's where a lot of institutional investors will invest. Not only when they're investing in a crypto fund, they look at not only investment due diligence, but something that many people forget is the operational due diligence side, which is something that any fund or business will need to pass in order to get that institutional capital. And whether you like it or not, tax compliance falls within that as well.
Just to add to that point, actually in Singapore, there was a tax moratorium passed on digital assets early last year. So, these are some of the things that the governments are thinking well in advance. And maybe Marco, over to you, since your firm is firmly chose regulation. What would you say to someone that said, it's far more profitable to stay unregulated?
Absolutely, it is, without question. These were great responses, by the way. Urszula and Henri, tremendous responses. I thought they were filled with facts and an accurate analysis, but the cold, hard, demonstrable reality is that outrageous, offensive profits have been made by unregulated businesses. Those profits continue to be made by unregulated businesses, and they continue to outstrip the profits made by regulated businesses. Full stop. There is no credible argument over that. The credible argument comes, so I think where Urszula and Henri were focusing on the future tense. Where will the money be made in the future? I happen to believe that, as I think Henri and Urszula do, that the doors are closing on that very long hallway of profitability for unregulated activity, but they have not closed yet. No question, they have not closed yet. Before I was at Kraken, and before I was at blockchain.com, where I was the president and chief legal officer. I was a partner at Cooley, which is a major global law firm. I led the fintech team at Cooley globally. I was a partner at Pillsbury before that, where I led the blockchain technology team, also a major global law firm. if there's anything that taught me, it was one from the slice, the sort of very broad slice across the industry that I was able to have a good viewpoint into. And it was that those who can successfully evade, not just avoid, but actually evade regulation, have minted untold amounts of profit. I do believe those doors are closing. And now, having worked on the company side, after telling people for years and years and years, look, you have to follow the law unless the law doesn't apply to you, right? And then we have to figure out where that line is drawn, and that's why people pay high quality counsel. Now, once I moved to the company side, right, you start to see, as time marches on, and the windows start shutting, and the doggy doors start shutting, and the real doors start shutting, how much time and effort is spent in thinking about and figuring how to avoid regulation. I don't deal personally in people who evade regulation, and I never have. But it is an untold amount of time, of wheel spinning, of sophistry, and intellectual acrobatics that people undergo within crypto companies to figure out how to deliver a product in an unregulated way. And you have to weigh that, being on the inside as I am as chief legal officer, against the real business costs that all of those mental acrobatics require. That is time, that is money, that is effort, that is loss of speed to market. At the end of the day, I think that by and large, if you can offer a product in an unregulated way today, you're not going to be offering it in that unregulated way for very long.
So the window is closing, but I guess what that means to your counterparts is that you guys actually have spent the time on that due diligence. Do you see them valuing that in that way? Okay.
Absolutely, and I'll say that, look, if you are seeking registration, if you are seeking licensure, if you're seeking regulation of any kind for a product that does not require it, chances are you're wasting money. Chances are you're not turning a profit that you could be turning. Perhaps one day that extra regulation will pay off. Maybe it'll pay off today because it makes a bank partner happy, because it makes another financial services partner happy. That's valuable. In the strict mercenarial sense, that is very valuable. But at the same time, you just can't leave money on the table. This is a highly competitive environment. Making the right decision means making the decision that follows the law and also accounts for the appetite, the risk appetite of your business partners. And oftentimes, those are the real regulators, the risk appetites of your business partners, not what the government has to say.
Yeah. Urszula, you want to add something?
Look, what I was going to say is that I do see a lot of advisors in our space often either not take a position at all because they're not willing to wade into the grey area with their clients. And really navigate the way through, because there often is a way through. Even if we're looking at some of the most highly regulated or restricted markets, mainland China, South Korea, we see law firms, and frankly, even we've seen this in the US, a lot of counsel stopping issuing any sort of opinion, providing a verbal guidance note only. And to be in that position where you cannot even receive advice, risk-based advice from an advisor is I think a great disservice to the industry. So, what I see most often in terms of good advice and a good play is that, yes, wade into the grey, take a look at what's possible, what's not, what's the sentiment of the regulator, and then understand where the red flags are to know where the tide's turning. So if we look at, say, mainland China, if you're operating offshore, purely offshore, there's some incidental business that comes out of mainland China. That's not necessarily going to get you into the same sort of trouble as if you were onshore. And some firms are willing to navigate the risks, and they just want to know where those actual risks are. And they want to know that when do they need to pay a different or take a different approach if there is a change in view. So I think it really is the responsibilities of those who are providing the tools for the industry to be able to wade into that and help clients navigate it.
Urszula, do you see the landscape to be more favorable in Asia in terms of regulatory?
Do you know, I think what's happening now is a good thing. We are seeing more regulation, but we are seeing pretty, tailored responses to risk. We're seeing certainly the need for regulation around AML and KYC. We always knew that was coming down from the Financial Action Task Force. That's going to happen globally. But we're starting to see also some intelligent, design of regulation around things like what good custody looks like, what sorts of controls through the exchange, exchange ecosystem need to be implemented. I do worry that there is, to some degree, overkill. And when we see markets starting to restrict access to the average person, that becomes problematic as well. Likewise, when you start to see a level of regulation in certain markets that effectively just push people out, we have the same issue when you have too hard regulation around banking. It moves people into shadow banking, and that's no good for systemic consideration. So I do think Asia is creating an environment that is still welcoming, to virtual assets. I also see the offshore markets, so Bermuda, Cayman, really coming to the party, so to speak, to create sensible regulation that gives people some certainty and clarity.
Yeah, talking about that certainty and clarity, just 2 days ago, there was a big news in Estonia, where they actually canceled the cryptocurrency license for 500 firms due to a money laundering issue of $220 billion. This is something that wasn't tied specifically to crypto, but these are firms that are choosing regulations that at the same time they're being tarnished with the same brush. Henry, what would you say to a firm that actually said, "I'm doing everything right, I'm getting my license, I'm getting regulations, but everyone's pushing me out at the same time and putting me on with everyone else"?
Well, on that particular news item from Estonia, I think it's very interesting where it was related to AML. I think the biggest, what keeps me up at night in our ecosystem today is that we find out tomorrow morning there's a big incident of money laundering or terrorism financing that happened by ecosystem or by some market participants who were grossly negligent in letting some of these money being laundered. I think the risk that could cause to our ecosystem, because that could cause damages that will slow down some of the developments that many of us and others have been working on with this regulatory clarity, policy, and openness to the industry. That's what actually keeps, really, I'm afraid from that perspective. That being said, as we all know, and I think anybody listening to this video session knows, obviously I would argue that the risk that we have with cryptocurrencies because of traceability and other tools that we have, just because of the nature of the asset class that we have, obviously I would argue a lot of the players in the industry have probably better KYC AML than arguably a lot of the traditional players, just because of traceability tools we have and so on and so forth. That being said, I think the risk that we have some of the players who either historically or now voluntarily are not complying with some of these best practices we have around the world, that could cause actually pretty big harm in the ecosystem if these are not remediated in the foreseeable future.
Sure. And it feels like some of these standards that are being raised have emboldened some of the countries to offer their own digital currency like CBDCs. A strong example is the digital yuan. They're already being piloted in several Chinese cities, where if the super fast adoption of digital payments like Alipay, WePay is any indication, we're going to have another success story here. So when CBDCs are launched, everyone's going to use it, adopt it, and fall in love with it. Myth or reality? What do you think, Henry? We'll start with you.
Well, if I put my professor hat for a second, right? Obviously, I've been spending a lot of time on CBDCs. The one thing, obviously, we're very early days. I think the example Alipay and the other tech platforms, and actually from WhatsApp in Brazil to others in India, payments generally work well in one country. Generally they may not be perfect, but they're okay. Obviously, the problem happens when we're moving at the cross-border level today. Today, as you know, there's about the average fee of cross-border payments is around 7%. There's about 500 billion they are sent every year from about 250 million migrants. And that's something potentially that a lot of obvious central banks are looking at it. To be honest, the biggest development we had on the conversational central bank digital currency, again, whether we like it or not, was Libra. I always say in the crypto ecosystem, we should all send a bouquet of flowers to Mark Zuckerberg to thank him for having brought this topic on top of the agenda of policymakers. And obviously, there's different models that are being created now. There's a two-tier system that the Swedish proposed in 2020, the Chinese are actually adopting as well, the US actually with Chris Giancarlo with a digital dollar, which is we use existing banking system and kind of disrupts or doesn't disrupt depending if you have a account or token-based model. The second model, which is what we call a synthetic CBDC, which is what the IMF is proposing, which is kind of a stable coin where the issuer has access to central bank reserves. And the last model that is getting increasing a lot of traction is what we call the platform model, which is what the Bank of England and actually what the Swedes proposed in 2018 as well. So these different models are coming into play. A couple of things. The one thing I would say is there's a lot of benefits from CBDC, including financial inclusion. I think anybody who's in the US right now, the 100 million checks that the government has to send to people to receive their the COVID-19 stimulus plan is a great example. But I would say there's risks that we need to address that are not regulatory or tax or anything else. They're really monetary policy. One of them, for example, that Libra has done a great job discussing is the risk of currency substitution. If I'm able to send in two emerging markets, Libra, USD, or any other stable coin, what is the risk that causes, not to G10 countries, but to other smaller countries from a monetary perspective? And that's a debate I expect to see even more on the policy side over the next couple of months.
Right. So Marco, this is going to create a cornucopia of stablecoin like CBDC like instruments that you have to start dealing with and digest for your customers. What are you going to say to them? How are you going to get all these coins onto your platform and allow this ecosystem to thrive?
I think there's a lot of work to be done outside of Kraken first in terms of development. I think the ecosystem has to mature considerably. We like to think we're on the vanguard of these things, but at the end of the day, we respond to customer demands. People want Bitcoin. We know that in the midst of unprecedented money printing over the last few months, we have seen our basic, most fundamental metrics, new account signups skyrocket, seeing record highs. We think we know why that is, and I think most of the world knows why that is happening right now. And it has to do with the relationship between free and open networks like Bitcoin, like Ethereum, like most digital currencies as we know them today, and governments whose current responsibility it is to care for our financial well-being in a very direct way. That is to say, it is the care and feeding of our money supply. It's unclear whether people will want digital currencies, and if they do, for what reasons. I don't believe people will want any central bank digital currencies. I don't believe that people will want any central bank digital currency for the same reason they want existing digital currencies. It simply does not make sense. The Venn diagram of those two consumer appetites looks like a pair of binoculars. They do not connect. People, I think, are right to be interested in central bank digital currencies for a number of reasons. They can make existing fiat systems much more effective, much more efficient. They can lower overall costs. Philosophically, there's really nothing to get excited there about. This is an operator's dream. This is a consultant's dream, right? How do we implement this new system? How do we rip out our old heart and put in a 3D printed one? As somebody from Wall Street once told me about blockchains. Those are exciting issues. That's sort of mental bubblegum. Is it going to change anything? No, it'll make transactions faster. It'll make transactions cheaper. Are people going to feel differently about their governments? Are they going to feel differently about their wallets? Are they going to spend money differently? No. Governments are going to be more able to monitor monetary systems. They're going to be able to do it much more effectively and efficiently than they can today, which is great because they can look out for financial shocks. They can achieve the goals they set out to achieve today in a much more effective way. That's scary too, though, right? There's a lot of people who are I think rightfully nervous about the government being their government being any better at financial surveillance than it is today. I think that even within that group, there are the philosophically inclined who believe there's something immoral about the government having so much of a view into our day-to-day financial lives. But then there are others who are just plain practical about it, and they say, look, financial regulation, particularly anti-money laundering regulation, has cost more than it's saved if you look at the breakdown by headcount of banks. and how much is dedicated to compliance. Presumably, those people might actually like what CBDCs can do because of that panopticon layer that might obviate the need for those kinds of compliance mechanisms. They could save a lot of people a lot of money, but let's not confuse that for consumer demand. That sounds like bank demand. That sounds like financial services demand, like Wall Street demand. We still have yet to see whether our users want that stuff. I look forward to finding out.
Yeah, that's a great point. So final round of questions. What is the reality that we're facing beyond regulations? Or if I could channel my inner Henry, what is the one thing that we need to know about the future of crypto? Maybe I'll start with you, Urszula.
Yeah, well, look, I think the story is far beyond the institutionalization of Bitcoin. Yes, that's an important question, but really we're talking about the transformation of money, the transformation of our financial markets, but also really we're now at the frontier of that competition between financial crime, compliance, regulation, oversight, surveillance, and privacy. And I think that is the battleground that we will see over the next, the coming months and years. And it is a very difficult one to follow, and that will follow along political, philosophical lines.
Okay. And Henry, one thing we need to know?
Yeah, for me, it's very, very simple. As I think this is a very exciting time in the future of money. And I think we're already going through this transformation. I think COVID-19 has a lot of negative sides in people in society. I think on this topic, definitely is going to accelerate the pace. And I think we're all of us are honored. I feel privileged to be able to live and work in the space, actually, a transformative era of this era. So very excited about what's coming ahead, not only on the future of the crypto assets industry, but on the future of money and indirectly on the future of society and economic policy, which is very exciting.
And Marco, you get the last word.
I love it. I think we're going to see a power shift. What we've seen over the last few years has been a simultaneous brain drain right alongside a financial drain from traditional money centers. Folks who were in finance and caught the Bitcoin bug went into crypto. And we've seen people of higher and higher ranks, more and more brass on their collars doing that. And what's come along with that is a drain of cash as well. Crypto companies are becoming more powerful. They're becoming more of a voice in government. They're becoming better organized. And before, governments could get away just kind of ignoring the problem or giving it to Mikey, as the old American saying goes, I think that's going to start shifting. You're going to start seeing crypto companies influence policy in a much more direct way.
Great. And I want to thank you to my panelists.